Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again in the Forex market. You can see on Friday we've got significant volatility because of misunderstanding on some things. It's coming from the numbers on the non-farm payrolls release. So at the first glance you could see as we've got the negative numbers, significantly negative. So actually it was expectation of the positive 50,000 payrolls, while we've got minus 140,000. And at the same time, this all information in the background, dollar has risen. At first glance, it looks confusing. Not everybody understands why this has happened, but actually, the secret is hidden in the additional numbers that's coming with the report. It's not the payrolls per se, but take a look at the hourly earnings. You will see that hourly earnings is stably rising, and this time it is numbers in excess of the 5%. So with the drop of the employment, with the decreasing of the working hours, you could see that the earnings are rising. This is clear indication of the inflation. And this is major driving factors for all markets, and around of the other factors are twisting. Interest rates and other stuff are all twisting around the inflation. Second, if you'll take a look at the treasury yields on this week and in general in the pandemic period, you could see that the interest rates start rising since August. And since August they have risen for 2 times. 10-year US yields. In the last 3 sessions, yields have increased for 25%. So though some reasons exist for that, so it's more stimulus from the Biden administration. It's promising the more money should be injected in the economy. But in general, inflation, it's not negative. And currently, we see some contradiction in minds. The investors thought initially, and we actually also thought, that the United States economy will be under pressure and depressed situation with low interest rates for a longer period. But currently, with the new reality that we have, and the interest rates have started rising a bit earlier than we thought. Well, of course, this will not be just straightforward action. And we still expect that in the first quarter of the 2021 and the data from the fourth quarter of this year will be poor statistic for the United States economy. But in general, changes are coming a bit faster than we thought. We still think that EUR keep chances on rising to 128 area within the perspective, but we suggest that now this process probably will be slower and more fragile. This could be broken in any time, and we think that closer to the end of the spring, some maybe in April and May, close to the June, it could be the breakout of the trend that we have currently. And dollar could turn again to the upward direction. Why this could happen? So, first of all, is rising in inflation, real inflation, with the lower interest rates will bring inflationary pressure and anticipation of the change of the policy from the Fed. This is first. Second, additional stimulus that will be provided to economy will trigger the consumption and spending of the corporations, which suggest the faster recovery of the economic activity in the United States. Well, and with the actually nominal inflation stands low, that will support the United States dollar. And we think that on the background of all this stuff, as European Union and European Central Bank stands more conservative on the politics of stimulus, they provide significantly less stimulus to the economy. And that aggressive policy from the United States and high inflationary expectations will trigger demand for United States dollar, demand for domestic United States assets, and with the higher expected carry trade in favor of the United States dollar, we suggest the break point in a trend that we have currently on the Forex. So it means that we still keep our scenario with the reaching of 28 area on the euro, but we think that it will be beat with the more tension for the euro to reach this level. So in the shorter term, all the stuff you could read in our report as usual, so there we take the look in the detail on this subject. In the shorter term perspective, within the coming week, this makes us think about deeper retracement on the euro currency. So you can see on the daily chart both grabbers that we mentioned on Friday, although, as I said, I'm rare, almost never trade this type of grabbers, but anyway, in our case, they have reached the minimal target, so you can see this created the new lows compared to this one. Prices drop out of the channel right here, and actually market nominally has formed the bearish reversal swing. Many things depends currently on the situation on interest rates in the United States. So if it was short-term reaction and trade starts falling on the next week, euro gets additional support, and we could get some either upward continuation or at least a pullback. If there's no meaningful retracement will be on interest rates, and this is real new trend in interest rates in the United States, euro currency will stay under pressure, and deeper retracement is possible. So on the weekly chart, we expect even or consider possibility for a deeper drop. For us, the major task here is to see price above 116, because 116 is the major vital area for overall bullish trend that we have here on the monthly chart as well. So while market stands at above 116, we could accept any retracement here, and it will be just a retracement with the keeping untouched the overall bullish trend. If market drops below 116, it means that the short-term and general trend on the monthly chart is broken, and we can't hope for reaching 128 target anymore. So that's important, decisive moment here. While market stands in this area, well, we think that trend is still bullish. Meantime, on the daily chart, we of course will be watching for smaller scale price action, and particularly speaking for the daily, would not consider any action below 121. Because you can see here we have the fib level, here we have daily reversal. So it means for next week probably that will be the floor. So all price action that we're considering on the next week will be stand somewhere in this range. On the follow time frame chart, take a look what we have. Potentially nothing really interesting. We don't have any patterns. Trend stands bearish. One pattern that we could consider is maybe 127 hand and shoulders. So in the case of the pullback in the beginning of the week, somewhere back to the 23 area, potential market could form here. The hand and shoulders potential of this ABCD pattern could lead us right to the flow of the week, somewhere around 2130 area with this ABCD. Additionally, we have the confidence support. This will be barrier for downward action around 2170, 2186. So that's what we have from the follow time frame chart. On the hourly chart, you can see market on the way down has reached the XOP predefined level that we have discussed on Friday with the non-farm payrolls release. You can see it now. Potentially what we could keep an eye on the beginning of the week. As I said, with the possible head and shoulders, first of all, we need to keep an eye on the possible pullback. You can see that 618 level stands approximately around the area that we will be watching for, 2290. Here you could recognize the hint on the hand and shoulders shape as well. So that could become, for example, the left shoulder. This could become head. Somewhere it will be formed then. It could become right shoulder. And we will keep an eye on first on this pattern, and then whether it will become just a part of the retracement. So, for example, this hand and shoulders could lead just to the ABCD pattern, as will complete the retracement back up to the 123, and then the effect will be over. Or this hand and shoulders will become the background for the further upward action, taking out to this top and moving back to the target that we have on the on the weekly charts, 2440. This is also possible if this action will be supported by a retracement on the interest rates in the United States. So, taking it all together, what the trading plan could be. First of all, for the bulls, if you would like to go long, keep an eye on the possible head and shoulders here. Once market will jump up to the 2284, then should be the pullback somewhere to 2240, 2235 area, somewhere back at this level where the right arm could be formed. In this case, theoretically, you could try to buy with the stops below these levels. This will be very small risks, about 25-30 pips. If we are correct, market should reach at least 123 area, or with the break-even stops, we could hold position as long as we want, hoping maybe the market could reverse up and continue upward direction. Additionally, we consider, for the bulls, taking the long position with the stop buy order around 23.45. So if happens so that market will break all these levels and come back to the top, this will be a hint on the possible upward continuation. In this case, we could use the stop buy order additional to this position. That's the background for the bulls. For the bears, you could consider this level, 123. Once the hand shorts will be completed, or maybe some other patience, or even without any pattern, market will show the pullback. That will be important point, because taking the position here, this will be crucial for bearish scenario, because we have the hand shoulders, right? So market has to turn down somewhere around 23. If it will not happen, then it means that market will go higher and the bearish context will fail. And this will be the point that you could consider for taking the short position with the stops against the top, or stops somewhere just above this top area, somewhere in this level, somewhere on the halfway to the top. This could be stop could be placed as well. Potential of this trade is A, B, C, top to the downside, somewhere 2130, 2140 target. Additionally, could consider taking some profit around this conference, because it's not clear whether the market will be able to break it down. So that's two scenarios that we could focus on the next week. Additionally, we do not see something else in the short term. In the longer term, situation becomes very interesting, because interest rates behaves more aggressive compared to what we have expected. And that could put significant impact on the overall situation, on the long-term trends, not only on the euro currency, but on all other markets.